Good morning, guys. Welcome to a new week of trading. So yesterday, President's Day, half a day, nothing much happening in that day. This Friday, we closed up pretty much in a range-bound day. Not much was going on there. Pretty much in a holding pattern, but to the upside. So we closed up the week without any selling, and I was actually a little bit impressed by that myself. I thought it was going to be a little bit of selling going into the weekend because you never know when some news is going to drop, especially on a long weekend. So, but the market traded up. We had CPI and PPI last week. The market traded up, held its gains, and so far the overnight has been holding. Yesterday's little baby session held out pretty good, and then we've been slowly grinding to the upside as well in today's session. So I forgot to split out the London session there. Do that real quick. So London session, but it's pretty tight range for the overnight. And that's kind of how we get started. Now, when on the news front, there's not much news to drive the market pretty much the whole week, actually. Today we have Empire State at 8:30. We have housing market index at 10. And that's about it. Tomorrow we get mortgage apps and housing starts and permits at 8:30, and that's about it. We have a 20-year bond auction tomorrow. Fed minutes coming out. That could be interesting. Thursday, jobless claims, Philly Fed, leading indicators. None of that really is going to make a big dent, I think. And then Friday, we get PMI composite, existing home sales, consumer sentiment. So not any of this news, I think, for this week has the punch to really drive the market in a big way, I think. Unless there's a big surprise. I think we may as much for potential earnings reports coming out or potential headlines coming out when they start doing stuff. There was no lack of news over the weekend if you've paid attention. There's been foreign news, there's been domestic news, there's been things coming in left and right here, but market is taking it with strides. So I'm going to start from the long side today. Basically, looking at Civic and the retest of these highs, potentially may see a breakout. We've been up here a few times against these areas, the 6150, 6160s. But this is, we are getting ready to get into price discovery territory again. Pretty exciting. So looking to buy weakness at this point. Watch this edge, the 6110s. That's when the upper edge we were talking about so much last week and a week before. This finally has been taken out and they're holding above it. So Friday session managed to hold above that level. We had one attempt to take it lower, but not really a good reverse retest. But watch this lower level here at it's a nice low volume area. It's right there at the 6110s, and if that comes out, that's when I start. Then we are going to rotate right back down in this lower range. So looking to buy weakness at this point against 6145, 35, 36s, 30s, 20s, and then down to the 10s for rotations back up. If they start taking out the 30s and the 20s here, the support areas, you may want to start thinking about dropping the bias and look for maybe a rundown here to 6110. Could be a small short in there, running it down to the 10s. If 10s comes out, they take out the low volume area again. They're going to probably ride it down to the 60, 85, maybe even lower at that point. So we'll see. Every time they've been up here, it's been some piece of news or something which knocks it down. At this point, we don't have a ton of news in front of us, so it could be very well that we hang up here and stay up in this area, getting ready for another move to the upside. We will see. Also, sometimes when you have weeks like this without news, that's when you get the big moves. They happen now and then. It's out of nowhere. Suddenly the market starts moving, and either buying or selling interest. Someone taking profits or there's some net accumulation, and the market just start taking off. Happened a few times, and it comes out of nowhere. So it's just look for that. But I would be looking for retests of these highs at the 55s and the 60, 65s for rotations back down. Not with a lot of aggressiveness at this point. It is a pretty good resistance area, but it's I don't think it's any rush to get short against them, even if I'm looking for short setups. It's one of these things that's been grinding for a few days now. So unless they absolutely fall out of bed right from the get-go, I'm going to be looking for short setups with a little bit of caution. If they start taking out the 60, 160 to 65 here, this upper edge, and start getting into price discovery, I would just stay on the long side at that point. They start taking that out, you start seeing extension, stay on the long side, look to buy weakness a little bit more aggressively at that point, because I don't think you're going to get a lot of weakness after that. So early on, let's see if we can get some weakness to get long against for rotations back up. And a little bit cautious on the short side right now, and then we'll see if they going to be able to make new highs, or if you guys going to be sitting here twisting in the wind for a while. But on the downside, watch these lower support areas. Those are the ones. There's the 6130s, the 20s down to the 10s. These are the key areas that needs to hold. So if they back off, those would be the better ones to get long against. But it's you never know which one is going to hold or not. All right, so that's how we get started into this new trading week. And let's see how far this goes. Oh, we're almost halfway through February already. Time is just flying. So that's the ES. Let's take a look at the NASDAQ and the bonds. The bond market had a pretty good recovery last week. They were down and they were right back up again. Big moves. Like this is the crazy stuff. They were the CPI way down, PPI way back up. And then we had a pop to the upside, and now we're kind of getting back down again. So it's kind of volatility going on that market. Let's see, there's my bond capital flow chart, but we are pretty much coming back in again. Actually, they've been spending some time in this low volume area around the 115s. They've been filling that out. So you can see they have two high volume areas right now. One at 116, 8 to 10s, and one right here at 114, 16 to 20. And they've been trading back and forth between these two right now. Couple of probes right now to the downside, but they've been pretty much bought right back up again. So looks to me like we may get some volume building here at around 115s. So what happens then is you start folding these together like this, and you start seeing how this low volume area is what's going to start filling out right there at the 115s. So spitting out that Z, that was that last move to the downside, and then to start seeing them start building value here. So at one point, this whole thing is going to start becoming one big distribution. But so far, so good. Holding on to yields are not spiking. The yields are not kind of falling apart either. So as long as the bond market is behaving like that, I don't think it's a major issue. If the bond prices start heading lower and the yield starts spiking, I think that the market is going to have some real problems. But at this point, looks like it's holding on pretty good. So we'll see where they're going to go. But at this point, looking to sell strength, 115.04s up to 115.12. Looking to buy weakness, 28s, 20s down to the 14, 16. So fairly tight range. And then let's see if they're going to try to trade outside of that range. So it starts trading about that 115.12. Stay on the long side. If they're going to trade below the 14, 16, stay on the short side and see if they can take it lower. So that's how we get started on the bonds. NASDAQ. Also close to making new highs. Pretty good move here. They had a pretty good move on Friday. It made new highs, though not a crazy amounts. Yesterday's little baby session was holding on to that gain. So you had new highs in the overnight, and let's see if they can make something out of it and keep this momentum going. NASDAQ has been really awkward about that. Every time you see them come up like this, they get knocked down hard. So it's at this point, let's see if this is the day it's going to happen, or this is the week it's going to happen. So I'm going to start from the long side again on the NASDAQ. Watch this level right there at the 22,080s. That's the one I'm paying attention to. That lower area. So it will be the low of the Friday session. So they get back down here to the 80s. I would be looking for long trades all the way down there. They start trading below the 22 190s. Just be maybe take off a little bit of the aggressiveness on the long side. Still looking to buy against the 150s, the 110s, the 22,080s rotations back up. But it's if they head below, take out the 22,080s, bets are off and we are heading lower. And then basically starting to retrace back down here again. they got some levels to take out here on the way down before it really starts getting gnarly. But the first level of resistance, support, is going to be down here at the 22,080 level, 60 to 80. This is this support area. Next level down is going to be right here at the 955s to 60s, and then you have the attractor down here at the 760 to 800s, and that's where if they take out those two, that's where we're heading. So starting off from the long side, looking to buy weakness against support. So looking to buy against, well, 260s is pretty aggressive, but looking to buy against 230s, the 190s, 150s, 120s, down to the 22,080s for rotations back up. These lower areas, if they start taking out that 190s, be a little bit less aggressive buying them, look for potential, expect a little bit more weakness, but still look to buy against these support areas. They could be shorts. I mean, they take out the 190s. They could be some shorts here on the way down as they run this lower, because this is at 190 down to the almost 100 points to the downside. So there could be some nice shorts in there if they decide to run it lower. But watch that 22,080 level. That comes out, I think bets are off, and we may head a lot lower. And on the way up, not going to be super aggressive on the long side. I mean, minimize that too fast, but. So for short setups against the 310s, the 350s, 380s, but I would just be doing that with a lot of caution. If this starts trading higher, looking for early strength, if you see early strength instead of weakness, it starts grinding this higher, I would be looking for a potential short, maybe a little bit more aggressively, because you can see that sometimes when you have a day which starts off with a day session grinding higher, and then you come C, D period, they absolutely hammer it and they just run it quite a bit lower. And that can certainly happen. But then you would see early strength instead if it starts off like that. But if you start seeing early weakness, and they'll start trying to run this lower and looking to buy it against support a little bit more aggressively. So we'll see which side they're going to go on here. That right now they're definitely trying to drive this higher. And then finally, oil and gold. So oil to get started, we had rolled oil to the next expiration, to the April expiration for today's trading. So if you are still on H, you roll it. And at this point, we get my capital flow on oil. So we're trading April oil right now. We're still holding pretty much in this range. And as you can see here, the grind is to the downside, and it's going to keep going like this. As the new policies kick in, the structural direction of oil is to the downside. Now, if you're going to go straight down, as I keep saying, no, it's going to go back and forth as you get geopolitical things happening, people, tariff threat comes out, whatnot. It's going to be back and forth, but it's not going to be like a big rally to the upside unless you have a war breaking out or something. But at this point, you have a pretty much a structural move to the downside. Small attempts to take it higher, run up here, run stops, trading around this area. Sometimes if you have a piece of news, you may get a little bit more of a move to the upside, but I would be looking for spots to get short against those. That's not super aggressively. I had to be a little bit selective, because I mean they can run it pretty high before they fail if there's a piece of news running it. So anyway, looking to sell strength for rotations back down on oil at this point against the 7160s and 72s for rotations back down. I would say below, or if they take out 72s, take off the short bias and go back range bound. At that point, we're probably not going to get any lower prices. And then on the way down, they're going to buy against the 71s, 70-50s, and the 70-15s. A little bit of caution since we are structurally to the downside. I was almost a little bit less aggressive on them, but oil has been kind of back and forth in the day session. So there's definitely day session trading opportunities from both sides of this. But overall, I would favor the short side on oil. And then finally, gold. That one is that's a crazy market right now. But it's from I understand that it is a net buying of gold. Central banks are buying gold like crazy. So that's kind of what where the dynamic lies. So there's an actual central banks buying gold and hoarding gold, and why they're doing it, could be a threat Could be fear of tariffs or fallout of that or whatnot, but it's definitely a hoarding of gold going on among central banks. So that's pretty much what's driving gold, and it's been doing crazy stuff. So I mean, the volatility is absolutely up there. So you see how they're running this higher, and then you have the as with oil, it never goes straight up or down. So you're looking at the market which goes, and they ran it all the way down here to that level. They were up here, up at the 2960s. Then in one day, they ran it all the way down to the 85s. It was pretty crazy. And now they are working themselves back up again, and retracing this to the upside. So they're trading in a range right now, I would say. And they get up to the 2960s, they get knocked down, and so far they get bought at the 2870. So that's the range they're trading in. I would just start off range bound. I would still keep a bias to the upside, given the overall capital flow is kind of to the upside. So I would favor the long side, but just a little bit less aggressively since we are pretty much in the range right now. Let's see if it's going to break out. But look at this stuff. They've been moving this pretty high. And here's your gap up to the April expiration. Gap up, and then you did not look back from there. So if I fold this back together, you can see that this is just a straight shot to the upside. And at this point, they're pretty much trying to find a spot to build value. And it looks to me that it could be in this range right now. That we have the 2880s up to the 2960s. It's the range. We'll see where the active volume starts building. All right. So I would trade this on the long side, looking to buy weakness this morning, 2927s, 20s down to the 16s. Probably down to the 2905. That would be the lowest one I would look to buy against. If they run it that far down, that's a pretty good 30 points to the downside. That's a pretty good move to the downside too. So I would be, if they start taking out that 20s, maybe start thinking, okay, maybe they're going to run it all the way down there and look for a couple of short opportunities to take it lower, but still looking to buy against the 16s and the 12s and the 2905s for rotations back up again. If they take out the 2905, that's pretty good support area, and that you see that the volume edge, that's the 2905s. If that comes out, look for maybe a run down here to the 85s again. So that's kind of where we are on gold. But starting off on the long side, let's see if they can get some moves to the upside here, keep that going. But there's a net buying of gold going on, so fear of something is happening, or people are buying up gold, usually because there's concern. And the only thing I can think of is that this reset of tariffs and trade relationships probably causing and driving that. But we'll see. At this point, that's how we get started on gold. But that's a crazy market to trade. You trade gold, you have to be a little bit cautious because that thing is moving. You can be on the wrong, if you're on the right side of it, you can make some bucks, but you can get shaken out pretty darn easily. Finally, ES, back to the ES and strength. NASDAQ also showing some strength. All right, so we're starting off here looking strong. So let's see if we can keep this going. We'll wrap it there for now. So, and let's see how this whole thing develops. So good trading, guys. And then we'll see what happens here come the day session start. All righty, guys. See you back at 11:30.